So do you remember here a couple days ago in NFP, right? The world was falling apart. Well, now the world's saved, and this story is all told by the lines on our charts, right? Um, we've got resistance right up here, literally to the tick. 2000 was the high to the tick. This is the same chart that you probably saw last night, and here was that S&P chart. Yeah, same one here, right? So looking for 2000 right there. One more push into slope resistance near 2000. So actually got 2000, and as per the analog that we're following with the S&P 500, we might have 1 to 2 days of just absolute crash downside action in equities, if you will, before it tries to turn up again. Look, these things aren't going to last forever. We've been following this one for a while, and it has worked, right? So we'll follow it as long as it works. I don't really know what to make of the bigger picture, because again, we were at the same line last week, right? This is the make or break line in global equity prices and in risk, if you will. And if this thing goes, I can't even imagine like what the heck's going to happen to emerging markets and everything else, because to me it seems like they're actually bottoming, and commodities are in large bottoming processes. So if this ends up going, it's very difficult to fathom that happening. I'm kind of more of the mind that we're in some sort of a range in the S&P 500, and that we do trade off a little bit and then find a low again in a couple days. Okay. So if that happens, the chart that I'm not even all that interested in the S&P 500. Okay. Mark with a funny question. How do you say still down to earth after calling this to the pip? Yeah, I mean, I've been doing this a long time, and you just, the good calls come and the bad ones come too. It's just the way it is, right? So, for example, we had a good pound call, we had a crappy EURCAD call, although to be honest, I'd like to buy EURCAD again. I'll get into that in a second. So, with the S&P, it's been nice as far as the timing's concerned with the broader risk component. Right now, as I was talking to Mike this morning, and kind of talking about, why is it so important to look at all these different charts together, right? Sometimes it's really it doesn't work looking at equity charts and everything is its own thing. That's not the case right now. Right now, everything's kind of being priced by the same mechanism, right? So it's no coincidence that we see big declines in Europe against commodity crosses, right? And they end up finding these kind of like short-term capitulation lows this morning, right as the S&P trades up into 2000 reverses, right? Doesn't look like much now, but look, if you get a down day or two, the rest of the week here, we'll probably see dollar CAD rip and Aussie come off and Kiwi come off, and probably see Euro rally a little bit too, and we'll probably see Euro CAD 200-300 points higher, okay, before it's time to sell for the bigger short, or at least that's kind of what I'm thinking is going on. So that's why I'm looking at all these charts for equity markets, in particular the S&P 500, which at the end of the day, you get a line like this that's so precise in its resistance and support, it'd be stupid not to follow it, right? So there's that. FXI, this is the chart published, and we've followed this on occasion over, at times, tried to point out, or I try to publish this chart when I think it's important, rather than kind of looking at it all the time. And so we hadn't looked at it in a while. Started looking at this week because something really big's happening here. The downtrend that had been underway from all the way in April, okay? And by the way, Kiwi topped over here, okay? This is also when dollar CAD started to rip. This is also when Aussie dollar started to tank. That's not a coincidence, okay? This is all telling you the same thing. So this is about commodities. This is about growth. This is about hard assets. and more copper than gold, and more silver probably than gold too, more industrial metals than precious metals. But that has a big influence on what happens with Aussie and Kiwi, obviously. Okay, and maybe even the Mexican peso, although that would be probably a little more tied to what's up with oil and EM in general. But when we look at this, okay, we talked about in the post last night, you know, the tendency for a market to come back and test what used to be support, okay, or what used to be resistance. So if a certain level, and in our case, we're referring to slope rather than just a horizontal level. But in our case, you know, we're looking at basically the upper parallels here, or the upper parallel and the little sliding parallel just above it. But that level at some point, probably in the not too distant future, we're going to be looking for support there. Okay, so if we're under the assumption, and it's a dangerous word in trading, right? But if we're under the assumption that FXI in China has made one hell of a low and that we have a bull market underway, and if we're under the assumption that Aussie and Kiwi have made really big lows, and that dollar CAD's made a really big high, the trend's changed, right? And we're basically saying this is a bull market now. We have higher highs, higher lows. So the idea is, what in a bull market do? You buy weakness, okay? That's the same thing as, you know, selling strength in dollar CAD and buying weakness in Aussie and buying weakness in Kiwi, et cetera, et cetera. That's why we're looking at all this stuff together, okay? So think about that S&P chart I just showed you, right? Go back to it. So here we are with the analog, right? Getting a little late in the game for this to happen, I guess, but let's say that we do end up finding you're getting back on track here and we get a couple really sharp down days. I can bet you that FXI China here does end up trading back down into this line. Okay, and that would be like 36 bucks, and where are we right now? 39 we hit today, 38.90. So 38.40, call it 36. So $2.50 over $39. Okay, and what's that going to get you? Like, it'd be a decent move. It's not, what, 70%? Something like that. So 2.5 over 38.91, 6.5%. Okay, so 6.4% would be the drop to get from here to here. That's a hell of a 2-day move, right? Even for China. Okay. Raj has a great question about trading, and I'm going to get to that in a second. I just want to get through my story time here. Okay, so if we get that dip here, just as the S&P is suggesting, we do get a day or two, probably 2 days of sharp weakness, maybe into the end of this week from here. Good place to do it, right? We had the resistance at 2,000. So if we do get that that drop, then we're likely to see FXI test this thing. That's likely to send dollar CAD in the much needed and much anticipated, corrective rally that is the one that's really going to be sold hard, okay, for a third wave or a C wave of sorts. And by that, I just mean, within a move, you have at least 3 waves, right? Down, up, down. And sometimes you get 5 waves. If the large trends change, you'd get 5, although I don't know about that, but we're going to deal with what we've got right here rather than trying to predict the next 5 months of price action. And same thing here. We're going to be watching for former support to become resistance, right? And I have a good feeling that it's going to be up around 132. 132.12 is the August high. The retracements, if we do draw them, again, I don't know if this is a low that we made this morning, but it could be. 29.50 would have been a little better, right? We had the low here from August. August low here. And that high from August is 32.12, so we could get back into that region too and test that as resistance. So we'll be watching this closely. but you know, it's all the same story. Okay. Same thing, Aussie. New bullish slope possibly. Haven't tagged this yet, but again, if we do, you're likely to see a really sharp pullback, okay, as China takes a hit and everyone thinks the downtrend's resumed, where in reality the downtrend's actually just a correction and it should be bought, just as any weakness in Aussie should also be bought, okay? And specifically in Aussie dollar, don't have the levels. Oh yeah, I do. 70.19 was the month open price. You know, off the top of my head here, just kind of going through this, like to see a confluence potentially down here and below 71 somewhere before getting real bulled up on it. Kiwi, it's actually already close to trading into and meeting its objectives from this short-term double bottom. Short-term double bottom gets you a target of like 66.85 or something. You've got the August high at 67.08. You know, we pull back from there again. It's a buy. No change here. It's all the same stuff, right? Didn't get the pullback that, you know, to buy it earlier, but remember 2 Wednesdays ago, actually, this was the 23rd. And we talked about going long during that webinar. It was not an official trade, but it was something that was talked about. And so here we are 2 weeks later and, about 400 something pips higher. Okay. And I'll answer a couple questions right now. Raj just asked me a question about the 4-hour hourly reversals. So yeah, so let's look at that. Okay, so here's EURCAD. Okay. EURCAD, this is a daily chart, but we want to look at a 4-hour chart. All right, here's a daily chart. I want to actually go to a different platform. So we have a 4-hour reversal here as defined by the J-Spike formula. Okay, and yeah, this is, you have to be bullish now on EURCAD. Okay, at least right here. All right, I think it's right to be bullish. I think it's right to look higher towards 148.80, 149. Hourly, one, got one there too. Okay, we also had one this morning at 5 a.m. that wouldn't have worked. Obviously, got stopped out after the 48.80 entry. So yeah, that's that. Okay, we're basically, you know, this idea, this trade is not so much about EURCAD, you know, itself, as it is about, you know, Canadian dollar. I really don't know what the euro is doing, to be, you know, to be honest with you. I'm not too sure what's going on here with the euro. Raj says, do you just enter now or wait for the pullback? Well, you can enter now if you want. I mean, I'm long some here. I haven't put in an official entry. You know, official entries I like to do for the swing trades are kind of based on specific sets of rules again, and one of those rules would be to enter at the hourly reversal support here, which would be close 46.17. Okay. And it'd be nice to have some slope there too. And this is really short term here, but if we draw this, okay, potentially you get some support here, okay, around this region here. So it'd be close to 46.20. It would be something to watch out for, right? If we just do a simple fib off what we had here. Also, I like to wait for the trading day to end. You don't know what's going to happen from here to the end of the day. It's better to, in my opinion, to let that let the market finish its day, see if you even get a daily reversal. Okay, so here's 50%, 46.27, 61.8 is 46.09. All right. So generally speaking, be looking towards, you know, commodity and commodity weakness, equity weakness over the next 2 days, which I think sets the stage for, you know, strength in dollar CAD, weakness, you know, some sort of pullback getting underway, and Aussie and Kiwi. Pound's kind of its own thing, kind of doing its own thing. We'll look at that here in a moment. BOE tomorrow. I don't know if that's going to be that big of a deal or not, but it is tomorrow. And Euro, again, just kind of in the middle of nowhere and still following the analog really that we've laid out. You know, from the 97 period, really, not yet 98, but 97 period. Okay, and right on schedule here, Cameron asks about U.S. oil. So, yeah, exactly. So U.S. oil has a lot to do with this, right? U.S. oil, we had a triangle breakout yesterday. This is the triangle, okay? This black line, the median line, this is the line to buy, in my opinion, okay? Same exact setup that we have on FXI, right? FXI, you look for the pullback to test former resistance. U.S. oil, you look for the pullback to test former resistance. In this case, this line is near 47. 47.13 is the high that we had on October 1st. Or sorry, October 1st, 923. October 1st, the high was a little lower, it's 47.05. So the view is that we pull back, and again, this is a breakout. Whether or not it holds, you know, is not up to me, right? The trade setup is there though. That, you know, the pullback into old resistance, watch for it to become new support, and then watch for it to go and watch it to, you know, go higher. So you're looking for support here, and this is all part of the same thing, right? Of a pullback in FXI, of a pullback in the commodity currencies, et cetera, et cetera. So that's what we're watching for. Okay. You know, that's the FXI daily chart right there. That's what that's the U.S. oil daily chart right there. That's what we're looking for. Pullback and rally. You would get it, by the way, a double, not a double, but a triangle target of this of about 55.41. I don't know if this new bullish slope is the thing to follow. It's just simply based on the trend line here. Okay, that's it. But it might be. I mean, you know, you have traded around it, and we did get today's high is pretty close to it, right? Up near 49.60, and we've pulled off, you know, pretty sharp since that point. And, you know, it's probably time to get a pullback, you know, of $3 or so in crude oil, given the fact that everyone's getting real bullish on this thing. I mean, I'm bullish for a bigger move, but, you know, beware the shakeout is what I'm trying to say. So that's what we'll be looking for as far as U.S. oil is concerned. And again, it's all the same story. It all fits with the idea of FXI pulling back, S&P pulling back, and the commodities pulling back as well. All right. So the question is, I guess, you know, in order to play this coming pullback for 2 days or 3 days or whatever, where's the best place to do it, right? Well, trading wise, it probably is something. It's probably pound CAD, because that's acting really well, right? You can see here acting well. It's held up for 2 days. Euro pound's coming off after making a reversal here last Friday. Okay, I do like buying pounds again, in line with the charts that we've been trading here recently. Right, here's pound, the daily chart, awfully clean, right? We were able to get long here. We just got out 53.20 as far as the official exit was concerned. I'd be looking up towards this upper parallel for the next resistance area, which is, again, probably not until the mid 54s over the next few days. So you might have 130 or so more points before you worry about the next resistance area. So as far as support's concerned, you know, I don't know if you get all the way back down here, but if you do, it's a great entry, a great spot to get back on board, which is 52.40. It's basically the, the retest of this breakout, right? And we know that pound likes to shake out, after its breakout. So do have a slope confluence down here. Again, there is BOE tomorrow. I don't think it's supposed to be that big of a deal, but just noting that we do have it. Obviously, you've got the median line here to watch for. That's been, it was kind of resistance, not all that precise. This is short-term stuff, hourly chart. Something to watch for, I guess. So you might watch for 52.90 potentially as well. See how the rest of the day finishes. The next big area of resistance, again, on the daily is like the 54s, 54.50 or so, 61.8 of the decline from the high. Although I would actually be looking at 53.80 as well, 50% retracement. You've also got a high there from 922. Okay. So do like buying pound weakness. Then there was a question here about pound yen. So pound yen, if we go to the daily, we're getting pretty close to resistance actually. To me, it looks to be pretty close to 85 is where the slope comes in. You've got former lows in the 84.25 region, but not sure about there being much there. Slope-wise, would be more interested in the sell. This is a trade that we could end up possibly trying to do tomorrow. 84.70 looks to be the slope actually right on the nose there at 84.70. So I'd watch for that. Mark had a question. He says, I see that on long-term charts you use IDC, and on short-term charts you use FXCM. Yeah, so here's the reason for that. On long-term charts, so here, let's pull up euro, right? So here's like euro dollar on the FXCM feed. If I pull up like a weekly chart, you'll know why. Okay, doesn't go back as far. So I want my like really long-term stuff, right? When I'm looking at a weekly chart, especially. So if I go to the IDC feed, IDC goes all the way back to Bretton Woods, 71. So I've got everything. Like I know this trend line's there from 1985. But when I look at a short-term chart, I'm obviously not that concerned with what happened 20 or 30 years ago. So I will look at the FXCM feed because after all, those are the prices I'm trading. So I don't want to be several pips off. So that's why I look at that. So yeah. So that, and it just so happens that, even for dailies, you probably don't even need that far back. But, sometimes it's just nice to have, keep the long-term, like the real long-term stuff in perspective, right? So we just looked at what the dollar CAD and kind of thinking that four-hour chart. So we got the 4-hour reversal here. So maybe it'd be decent idea to try to think about playing a rebound in dollar CAD itself up towards 132 over the next few days. Again, I don't know if it wants to test 29.50, right? So it's one of those things where you could be right about this thing going to 132 over the next couple days, but you could be totally wrong and lose money on your trade because you enter now instead of waiting for 129.50, right? There's really nothing right here slope-wise, okay? If we make a J spike or something, that would at least give you some sort of a setup, but again, the day's not over, so wait for that. you know, for Aussie dollar, which I guess would be your closest tie, right, to playing kind of a weakness, global weakness scenario. I should say, sorry, Aussie yen would be your closest one. I actually have resistance a little higher. So I've got resistance for Aussie yen up at like 87.60 or something, 87.70. And this is, you can see, here we go, the pitchfork that goes way back, right, to the 2014 high in November. So, you know, this was the median line that got the crash lows on the 24th and the eventual lows September bottom. And the upper parallel from that's higher, the sliding parallel, which does cross the highs in June as well as August, is even higher than that. And then you've got a confluence with what would be considered a new bullish slope. And by the way, a break above 87.30 would actually complete your inverse head and shoulders pattern, but based on slope, I would expect that to fail. Okay, so can't you see it something like this? Can't you see Ray rally up here a little bit? And then everyone gets real excited because it's an inverse head and shoulders and the market's going to go nuts and we're going to rip like crazy. But then there's slope there, and so we're like, yeah, I don't think so. And we sell it, and then it goes like this, right? Or at least like this. Okay, so this is a chart I'm watching for, again, based on the idea of the S&P finding the huge resistance that we did. And I think that we trade lower in the S&P, but you know, if that happens, it seems pretty unlikely that the Aussie yen gets all the way up to 87.60. But hey, who knows, right? You never know. So based on this chart alone, this is an area that I'd look to sell Aussie yen, right? I would not go long here thinking it gets there, because that's not what you do. You look to trade at the big levels, right? And the big levels are higher. Okay. So that's your best risk on, risk off indicator, right? Is Aussie yen. So if it gets up there, just be aware that we've got potential for a much bigger, you know, turn lower, or at least, you know, a pullback from probably 88 to 85 in Aussie yen. Okay. So that's where we are with you know, with your big risk on, risk off stuff. Thinking we do get that pullback in some of these moves that we've seen over the last couple weeks, right? As far as pound, we looked at pound. Let's see here what we get. S&P is climbing back. Oh, euro yen. That's one we should look at because we've kind of been waiting for that for a while. All right, so euro yen. The 61.8 of the move down, right, from 917 to 923. That level been 135.80. That's where we've wanted to be, you know, short, right? So hasn't been able to reach it. It's failed just shy of it actually for basically the last 3 days. So as it is now, you know, I don't really suggest like just going short because it got close to there. That's not the idea. Again, the idea is to trade on the big level and then look to tighten up your risk after you trade off of it, right? So we don't have that. So just kind of put it on the back burner and let it do what it's going to do, in my opinion, for the next couple of days or whatever. You know, kind of thrown in limbo here with some of the risk crosses. Dollar yen, want to be short, but want to be short at the right level. Failing up here, failing up here. You know, was thinking that we'd get a much bigger move in dollar yen after the S&Ps rallied like what, from mid-18 to 2000, and dollar yen didn't really do anything, right? So kind of throws a wrench in that idea as far as I'm concerned. So look, wait for it to do what it wants to do. If it wants to start breaking down, it can start breaking down, right? If this thing wants to, trade up to the upper parallel on some stupid reaction because some guy out of Japan said something, then let that happen too, and then we can sell it there, right? It's just a big part of trading is waiting, okay, and waiting for the opportunity to get on board with a nice position, okay? And that hasn't, it's not really it hasn't happened yet here, at least as far as, as far as dollar yen's concerned, okay? We had a question here on pound to Aussie. So I haven't looked at pound Aussie in a really long time, but here's a chart that I have of it for you. Just kind of have it already made, I guess. So the immediate bullish slope has been broken, obviously. Could get a bounce here. This is a level that's been support and resistance in the past. This sliding parallel, okay. That's, all I can really say. It's not something I'd want to trade personally. My idea here as far as is that the big trades are on the downside in Europe against commodities, right? I'm just saying for the next few days, I'm thinking that we could start to get a pullback in some of these moves. Okay, so if that's the case, then yeah, pound Aussie could get a nice little bounce. But again, I have very low conviction in putting a trade like this on, at the moment, because this is a downtrend. Okay, we've started a downtrend from here. All right, we've been talking about this for 2 months, as far as the August 24th, basically bringing an end and kind of being a pivot in the in the grand scheme of things, right? In other words, a big change in behavior took place here. This was a market-wide washout. A lot of times market events kind of, liquidity events like that kind of end up, as the final washout. And in this case, that was the final washout, in my opinion, of commodity currency weakness and commodity weakness. And we've seen that kind of materialize since then. We've had a crude oil breakout. We've had a dollar CAD top. We've had Kiwi held its lows the entire time and is now, moving up to resistance up near the August high. And once we get up there, we probably pull back, and then it's part of a much, broader bottoming process. Okay. But as far as this being a trade, it's a trade, I think, on the short side to sell weakness, right? So that's kind of all that I'll offer at this point. I don't really have anything else to say as far as pound Aussie is concerned, or anything, on that end, right? Go to a 240-minute chart here. See if we can find a slope on here. I'd probably be more willing to trade, pound's holding up pretty well. I probably wouldn't want to trade pound crosses to the short side anyway until they got to, until pound dollar got to resistance, which isn't until the mid 154s, right? Yeah, so not much to work with here. Here's pound CAD. This one's actually a little more interesting because you do have, remember that one? It's a 204.40, 203. What was it? Oh, it was right here. It was this one. It was 204.40. It was that. It was go back to 923. Okay, so this one, pound CAD's a little more interesting because you actually have something to trade with here. You've got a longer term, much longer term slope right down here. Okay, so you could see something of a bounce here in pound. And that's why I'm kind of more willing to trade some of these CAD crosses than Aussie, because CAD has come into much closer to a region that you could see some support for dollar against CAD, see some resistance for CAD in general. Aussie, not so much. I mean, Aussie's kind of seems like it wants to go a little higher before it rolls over for some sort of a counter trend move and see how the market handles that weakness first. Let's see what this looks like. This is one that might be worth following for pound CAD. Okay, especially if you can get up to the upper parallel. You've got former support over here in the 202 region, for pound CAD. So, story's the same, right? Kind of looking for that bounce in these things and pullbacks in commodity currencies and commodities in China and everything else. But in my opinion, that the trend's changed and that it's time, if you do get that rally in dollar CAD, CAD crosses, etc., that the trading move is to sell that. Okay, just like the trading move right now would be to wait for crude oil to come back to support and then buy that. It's all the same thing. Alrighty. What else should we look at here? Bill asking, is that a legit head and shoulder in pound CAD? Yeah, absolutely. I know what you're saying here. You're saying like right here, right? Yeah, so it is. Let me draw it. So this would be legit for sure. So yeah, that's legit, no doubt about it. Idea again to pound CAD. 55 days up. Oh, what's the weekly reversal support or resistance, I should say? 203. Okay, so now it gets interesting. Sometimes, like when you're the close of the high bar, the reversal bar. In this case, it's this little close right here, right there. So that level is one that you look for to act as resistance because we've just broken it, right, on the downside. Like we've followed through on it. You can say that we've definitely followed through on this thing now, right? Coming into support from the long-term median line, okay, made a low down here at what was that, 198 or so. Rally up to here would fit, certainly. And if right on the thesis that this thing does indeed find some sort of a low in line with the whole risk situation over the next few days, or maybe it already has, then yeah, we get a rally up back up to 203. And this is an even longer term one that I didn't even realize. So you do have this old parallel, which is resistance here. Resistance, we actually just hit that. Okay. This is a weekly chart, and this goes back years and years and years. So this is a good place for a much more legit bounce. But then, yeah, it is legit head and shoulders top. So I'd be looking to sell up here too, right? So higher from here, up into 203, and then lower. maybe we'll try to get into this with the swing update, okay? Because I do think even with BOE tomorrow, I do think that pound is better to be on the long side than euro at this point. And the euro pound chart tells all with respect to that right now, right? So look where we topped. This is a chart I put out. I mean, I think it's on the long-term page, but this is a chart that, you know, euro came right into resistance against pound last week and pulled back. Again, I think the trend here's changed too, and I think this is a buy when you get down to 71.30 or so. You got huge slope stuff down there, and guess what we also got down there? We got a fib. 61.8 of this entire move is 71.30 on the nose. Okay, so lower, be more bullish pound than euro. Then once you get down to 71.30, be more bullish euro than pound. Okay, so down and then up. And this is a weekly chart, so this is a substantial move. Another cross of related instruments or related currencies, Aussie Kiwi, right? And we looked at this one yesterday, and similar deal here. Would be watching for support and this is broad-based support, right? More important support, not just talking about really short-term stuff. Would be looking for support more or less from here, you know, down to say about like 107.90. Okay, and you've also got the gap at like 107, I think it's 107.60 or 107.70. So, you know, careful on the, you know, the move down here on a potential breakdown. I think that there could be decent support down here at 107.75. Have more of a fake out, if you will, than a breakout. And this, by the way, is Aussie itself. So, you know, with Aussie, you do have median line potential new down or uptrend resistance just a little higher at 72.50, but a move just right through the high over the next few days. Maybe get yourself a Friday high up here, and then look for the sell. Okay. That puts us up near probably 72.90 or so. So a little rally up into there, a little pullback into maybe 71.30, 71.40, and then off to the races to the upside. Right, so that's where we're falling. It's not really a lot of traded, you know, stuff to do. It seems like right now, because, you know, with some of these commodity currencies, they're strengthened too much to buy at this point on a timing basis, but it's also too early to sell them for counter trend moves, which is why I think that the next, you know, trade I probably put in is probably going to be pound dollar again, right? Be looking to buy any weakness down into the mentioned support areas for a move up into the mid 154s. Euro yen maybe too, but, you know, being patient on that one. Okay. All right. So if there's not, are there any other questions? If there are, I'd love to take a shot at them for you. Gold. Yeah, sure. So here's gold. So we've broken out. Gold has on the slope basis. Okay. We had this level highlighted 1107 and a quarter right before NFPs, and you know, I think the trend probably higher here in gold now. You do have much longer term resistance to contend with, up all the way up to the high. Okay, and the high being the high from August. Okay, so where am I? Here I am. All right, so let me see what the fork looks like here, because at some point we're going to need to identify a tradable slope on gold on the upside. Okay, and maybe this is it. I don't know. At this median line right now, again, this would be modified shift, in which is basically just the trend line, and I'm not drawing it off the spikes down here, right? I'm going from down here from the 731 low. And the same thing holds here, guys, that had held for everything I've talked about today, you know, with talking about, you know, the Chinese market and, you know, everything about support becoming resistance and vice versa. Same thing here. So if gold wants to take off on the upside here, keep this line here, keep this structure here, because this old resistance area is going to provide support at some point again in the future. More than likely, it usually does. All right. Maybe that happens over here. Okay. You can see that was support actually here. Okay. Maybe it happens all the way over here in November. Right. Quite possible. So, you know, this is not short term. It's not my thing. But, you know, bigger moves. This is a bigger behavior change. You know, you could look to try and buy it here, but the setup probably is not to do anything for now. Wait for it to really prove itself, wait for it to pull back and for people to get scared that it's going lower again, and then buy it for a much bigger move. Okay. So that's what we're looking at as far as gold's concerned. You know, the big test on the weekly, again, is a little higher, and you still got, what, about $20 left before that big test. So one more pop, a little pullback, and then a lot higher again. And that would be one, if you buy it down here, that would be one where you buy it for a really big bull market move, you know. Like I'm talking back to, you know, back to the highs in May, right? Back to the mid 1200s, back to the 1300s even. Anything else we'd like to look at today? Dollar knock. I don't know if I've looked at anything on here for on a short term daily chart. Here's the weekly chart though. And talk about long term. This is long term. This is a fork. You're talking about the median line that goes all the way back to the set low to the 70s. Okay. That's the low from the that's the all-time low, 1978. And guess what? We just slammed into it as resistance. So same thing here. We probably made a massive top, outside reversal, J spike on the weekly. You know, it would like to see as a tradable, a bigger trade, you know, idea or event or what have you, you know, a move lower here and then a pop, and then you get your, maybe your topping pattern in the form of an inverse, not an inverse, but a head and shoulders pattern, right? So let's see what this looks like. Okay, so that might end up being something interesting. You know, this could be a slope that you end up watching. It's way too early to make this, to suggest this is something to trade. But you know, the topping process is certainly just that. It's a topping process at this point, right? So yeah, dollar knock, not much of a trade here in my opinion. Levels to be aware of. Look at not that far below here actually, because you've got the high here from, what is that, from April. It's just below. Obviously the much more important levels are going to be down here. July low, August low, recent September lows. Okay, but the next move is probably the sell. Okay, sell the next rally. And again, who knows when that happens, but when it happens, it might be on one of these slope lines. So let this thing take its course, let it do what it wants to do. If it wants to trade down here, find a low, you have some confidence that maybe it's the right deal to sell up here if you get a bounce up here over the next 4 or 5 days. Okay, that's certainly a possibility. Trades all the way down here, you might be looking for resistance at the median line, although I'd be more likely to look at it up here still, just because topping processes do tend to be a little more, the pullbacks tend to be sharper and deeper. In this case, a pullback would be a rally, right? But I do think, given what this thing tells you, this long-term chart, it's a pretty good place for like a massive decline to take place. And that's kind of true for a lot of dollar pairs, especially the commodity related ones. Dollar knock is one of those commodity ones. It's oil, right? So you could say the same thing here about this in dollar CAD. Counter trend move coming. In this case, rallies in both. Maybe last a couple days, maybe longer, but be looking for sells on those. Cameron asking, what's your basic idea of your trading style? Because EURCAD and pound yen trade signals, I was very sure they will hit stop loss. Well, so I look for, typically I look for support to buy on an upslope and resistance to sell on a downslope. That's pretty much the gist of it. So if we go to the pound yen chart, so we were looking at buying, what was it? Is it over here somewhere? I mean, we were right to be bullish, just we're a couple days early. That's kind of, it's just part of trading. So, not really sure how else to explain it, but, we're looking for, again, for support, and we didn't have support on an upslope. It probably should have been more patient. We actually still wouldn't have had support on an upslope. This is still a downtrend. But we had median line support we were looking at here. So that was one reason, I guess you could say, that we were looking at a long there, is we did have a point of reference to trade on. If we would have had a wider stop, it would have worked out fine. EURCAD, I explained this one in last night's post, but didn't have upslope. And again, I still think it's right to be bullish here, because I think you go back and retest for, 48.80, maybe even 149, maybe higher than that. But yeah, as far as taking the trade and not working out, I mean, that's just what happens. Okay, sometimes there's winners and losers, and that's just part of trading. It's not rocket science. So EURCAD again nicked out here 45. 90 was the stop. We're currently trading actually right where the right near below where the entry was at 46.80. We're trading 46.57. So could end up making some sort of a reversal day. We had a 4-hour reversal. That's one thing I'll look at. Again, I do like it higher. Probably wouldn't end up putting the so-called official trade in because there's no upslope to trade on here. Pound CAD's a different story. Because we do have the longer term slope that we just talked about right here. Okay, so pound CAD might be worth looking at. The better trades, and I can't say this enough, I probably sound like a broken record, but I don't really know how else to get the point across, is that I think that the big trades are short Europe and long commodities. Okay, which would be short pound CAD, short EURCAD, short pound Aussie, short Euro Aussie, short Euro Kiwi, short pound Kiwi. Okay, topping processes are just that. They take time. So there's nothing wrong with trying to trade the wiggles in between them because they can be pretty profitable too. And that's what we're trying to do here. Okay, so I'll be looking at some of those charts here over the next few hours as I try to figure out the next moves. Okay, pound dollar. This is one that worked out, and it's probably because it was more in line with being disciplined and buying on an upslope, right? And that's what we had, an upslope. So the next move here, again, short term, is to continue to look higher into short-term slopes, which are outlined on last night's chart, and I'll publish again tonight. But then eventually, I'd like to start looking lower. Okay, especially if we get up into resistance in the mid-40, 154s. Okay, and that's what I'll be looking at as far as the pound's concerned. So I guess at the end of the day, Cameron, just to kind of explain, to summarize, strategy is to find slope and trade slope. So find upslope, buy on upslope. Find downslope, sell on downslope. A lot of the most all the good trades are doing just that. Most all the bad trades are probably because I'm just forcing the issue and doing what I think is going to happen rather than actually taking the strict setup, right? Of course, with my style, there's not going to be as many trades as probably people want to do, right? Because really big, beautiful turns off slopes like this, they just don't occur that often, right? And that's, by definition, what makes it, a selective kind of trade. But, there's a lot of things that I trade that I don't give the signals on, like the S&P 500, for example, is something I trade quite often. And, we traded off from 2000 to 1970, 30 handles this morning. That's a huge move in a matter of 2 hours. So I trade that stuff a lot. Dollar yen was one that we had last week when we talked about, if you read the last week's pre-NFP report, we had basically the idea that the market was going to fake out. So down into 118, 40s, 60s, something like that. Didn't make it there. It ended up trading down to 118, what was the low? 69, 70, and then it ripped. So that was a place that we were looking at as far as fading the NFP move. Obviously, some of these are just impossible for me to give out a so-called official signal on because they happen in the course of minutes. So, you said, why don't we get this type of signal? Well, you're more than welcome to take that trade, as far as the S&P 500, the levels are there, right? I try to update and send you guys, just because I don't say that I'm not going short or long doesn't mean that it's not support or resistance, right? I give the FX signals, right? Also, I trade the futures market. I don't trade the CFD market, and I'm giving you guys the CFD levels. So, um, you know, I would, if I'm giving you the level, like there's resistance or support here, then feel free to trade it. Okay. All right. Okay, so that is that. I'm going to wrap it up today. And good luck, everyone, the rest of the week. Again, general thesis, looking for kind of this resistance in risk, if you will, right? Turn down for a couple days or something, potentially in oil and in the stock market and China's stock market, and Kiwi and Aussie and CAD. And then those moves should be the ones that we probably look to really, really position for much bigger moves, but takes time. So have some patience. I know it's difficult. That's it for now. Okay. Pound dollar trades probably on tap for BOE tomorrow, by the way. So we'll have those levels laid out overnight. Okay. All right. So thanks again. Have a great rest of your week. Take care. Bye.